All right. Welcome back to the channel, guys. This is Coach UV, and I am represented by the Unique Trading Group, where strategy meets mindset and discipline turns into income. I tell you what, I got a jam-packed video for you guys tonight. I do not want to hold you guys long. I want to give you some good guidance and some insights for the rest of the week before the halftime show. Today specifically, we are going to be talking about SPY, Tesla, and gold, with a little bit of market eternals like the put-call ratio and the advance and decline line. We have gotten some follow through on some of our previous videos, so I want to say thank you so much for those who have been watching. I appreciate you clicking on this video whenever you decided to. All right, and it's time to get back into our bag, right? We want to make some good money in a very strategic way, and we want to be very disciplined, and we want to focus on risk to reward. And so we want to have a game plan going into the rest of the week. All right, and so what are we going to start with? We're going to start with the SPY. We're going to be talking about Tesla, the put call ratio, and gold to recap some of the videos from last week. That way you guys will be prepared. All right, so I know what you guys came here for. Don't want to hold you long, so let's go ahead and hop over to the charts. Right in front of me we have the SPY, and this is actually the SPX on my screen, and they kind of correlate. We can go ahead and go to the SPY. All right, and here we have, all right, SPY. All right, now first I want to let you guys know, okay, I like receipts, okay, and before I go any further with this current market analysis, all right, for 2:23 p.m. right now, the current time is 2:23 p.m. It's 5:13. The market is still open, and we have about an hour and 30 minutes left. I've already locked in and secured some profits, and so I'm just getting the rest of my day started, making sure I give you guys some guidance before the day is over with, so we can start fresh tomorrow for the rest of the week. Okay, so before I do that, I want to give you some proof and some receipts of previous guidance. All right, are you ready? Okay, here goes Tesla. See that? All right, if you're listening to me right now and you made it this far to the video, I want to say thank you. Okay, I appreciate this. This is a powerful message I'm giving you. It sounds bland, but it's powerful. Tesla above 295.25, super bullish. Again, Tesla above 295.25. I'm super bullish, especially if we get above this midway point in your racetrack. All right, like this is all the way in the threes, people. If we can get above these certain numbers right here, you know, above 21 to 295, we can start shooting up to the upside. Okay, my first target is 300. Second target is 320. All right, you hear that? Above 21 and close to your race theory, your racetrack midway point. My first targets was $300 and 320. All right, and what do we have here on Tesla? All right, here's the 295 recap race theory price number that I put out for Tesla, and as you can see here, we broken out. This is what you call a high probability setup. Okay, this is an edge, and I specialize in these type of trades because I don't want to be inside of this chop right here, right? I'd rather take the breakout trade for more follow through. All right, do it with me. You ready? ATM sound. I like that flow. And we are now sitting at 337.23. My entry price for calls was $295. We hit $300 relatively in no time, and now we are sitting at 337. Right now, we are currently inside of a parallel channel trying to break out. The next target on Tesla is at 340, which is major resistance. At 340, we could possibly create a lower high at 350. But I'm very bullish on Tesla going into the next quarter. Okay, we have the volume profile suggesting that we have thin zones. All right, we have thin zones all the way up until, like I said, around 355, forgive me. 355 and 385 are very possible. Anything's possible. Since April 22nd all the way to May 13th, with this less than a month's time, we've went from 219 all the way to 337. So that's proof that money can be made with patience. Money can be made with preparation on stocks like Tesla. And that's my recap, guys. All right, 295. All right, now let's hop over to the SPY. I also did a recap video for SPY. We are sitting at 588. And here is that recap video for SPY from my rally or rejection strategic trades at uncertain times part 2 that I dropped a day ago. And here is the proof. You guys ready? Here you go. See this big megaphone? This big megaphone like at a sports game? All right. What you have is price that swings back and forth. Back and forth. Back and forth to these pendulum swings, okay? And the market wants to rotate. And that's where we are right now, okay? In the swing of things. We're inside of that. And so next week, we want to see price open up above the previous close. We want price to open up above the previous close. SPY needs to open up above 564.34 in order to see bullish continuation to the upside. Wait for higher lows and higher highs to be created on any pullback. So market structure is present. Stay in your trade and reach for your next targets. You can use the ATR or you can use previous highs. And there we go. 565, 564, those were your targets. And what do we have on SPY? Okay, now 565 was the target, and 570, I mentioned in that same video, which you didn't hear just now, but I mentioned that 570 was a resistance zone, and if we could break above it, we will have parabolic moves, because I want you guys to notice something. You see this pattern here on the daily, all right? This is what you call an inverse head and shoulders, a inverse head and shoulders, all right? And why is that? Because we have, all right, here's your shoulder. This is just like a human body, right? A human body, okay? We have two shoulders and we have a head on the shoulder, right? So this is the head and this is the shoulder. Right by your 270 mark, 265 mark, okay? All right, now, looks like a two eyes on a smiley face, right? But the inverse, all right, we have two types of patterns, all right? A regular pattern is called a head and shoulders, where you have a series of equal shoulders right here, 1 and 2, and you have this head. So shoulder, head, shoulder. This is a bearish pattern to the downside. However, this pattern right here is a bullish pattern to the upside, okay? All right, we have those same shoulders in that head, but it's just in the opposite, the reverse from this one. And this is the pattern you see right here, a bullish pattern, all right? A bullish reversal, getting out of the bearish momentum. So here again, two shoulders and a head. You got two shoulders and a head, all right? So let me take this off of the screen, all right? And that was a pattern that I noticed. I also seen a double bottom. So this is a double bottom inside of an inverse head and shoulders. And I posted this on my YouTube comment and also in the Webull community and my Discord that I seen a parabolic move happening in SPY. And that's exactly what we got here. All right, right above 270, which was a resistance zone, a breakout trade, a ORB, a open range breakout, one of the most popular trades to take. All right, listen guys, I want to say quickly, if you want to get into trading, whether you're a beginner, intermediate or advanced, all right, some people might not need to hear this, but for those who do, all right, trading is not about making money. Spoiler alert. Trading is a business. Spoiler alert. People get into the market want to get rich quick, and this is the wrong mindset. What about if you had a setup that works 9 times out of 10, and no matter if it worked out or not, you took that trade just about every time you've seen it, and you protected yourself to the downside with a stop loss. A stop loss is a technical word in trading in the stock market that you can use and you could do and implement on your trades. A stop loss. It implies exactly what it says. It helps you stop your loss. And so you decide whether you want that loss to be $10, $20, $100, or $1,000. You decide that. You are always to define your risk, your entries, and your exits before every trade. That way you are defining things and you're working from a clear plan, not just randomly trading. Trading is a business and it's about risk to reward. And so you got to understand the setups, the best setups. What is your edge to take? Okay, if you can find a good edge and a setup that works, practice that, stick with that, and continue to do that. The market is not going anywhere. You don't have to use a bunch of indicators. You don't have to follow 1,000 YouTube subscribers and try to do everybody's strategy. You'll never find your own. But if you can find something that works, that you observe, that you paper traded with confidence, right, to see how things really work, the mechanics of the market, that's when you want to try to hone in on something that you've seen work and build a trading plan around it. All right. And that's what I specialize in. This is the Unique Trading Group. All right. Where are we headed? where are we headed next? This is a recap video, right? Where are we headed next, okay? So since we got that breakout trade, what do? We got the ATM sound. Right up to the upside. We are currently at 587. All right, we've tapped 590, right? We are at a bit of a resistance. And so what I want to see is, all right, this is what I want to see. This is what I want to see going into tomorrow in the next couple of days, all right? We have to hold 575, more specifically 577. 577 has to hold for the rest of the week in order for us to see continuation to the upside for next week to reach 600 by next week, okay? My first target breaking above let me see, maybe 2x, 3x, let me see, what would this be? 589, so 589.07 on the daily. This is my trigger for calls, 589.07. 589.07 on SPY is my trigger for calls for me to take a trade to the upside. We must close above that level, all right? We must close above that level. Now, it's more than likely that we could see these levels surpassed because, as you guys know, I like to take trades to the up or the downside based on if price is showing me relative strength above the previous closing price, all right? And right now we are above the previous closing price, all right? Today is Tuesday. Yesterday was Monday, okay? And we closed around 582.99. We closed around 582.99, and today we opened up around 583.41. That's higher than the previous close. If we've been bullish ever since, I want you to remember that I'm going to keep knocking it over your head that this is an edge, a high probability setup that a lot of people use, okay? And so I want to see us stay above the closing price today. Whatever the price close up today, I want to see price open up above that tomorrow for upside continuation. But if not, no bias, I want to trade back to the downside. And why is that? Because people could take their profits. Profits could be taken, okay? It's not out of the question. We want to be prepared for both scenarios. And so we have a gap down here between the 573 zone. I would target puts if we can fall below 577.04. All right, 577.04 is a high probability setup on the daily for a trade to the downside to reach 570, all right? And for a higher target, 589.07 is my call trigger to go towards the upside, towards 590 and 600. Anything in between 589 and 577 is scalp nation, a day trader's market, because you can find money in between the daily ranges, okay? I hope that makes sense to you. You can rewind it if it does not. But I'm going to be moving on. We already talked about Tesla and SPY. You see the recap. You see how to trade these things, all right? All right, don't ever chase trades, all right? If you miss trades, always wait for a pullback. Do not chase trades. And right now we have a little bit of resistance on the SPY as expected for us to fall back down to 582.95 and possibly fill the gap, all right? Right below our 570 mark that we talked about, all right? 577. If 577 is weak and price falls below 577, all right, which will be below these Bollinger Bands here on the 1 hour, I want to target 570, 568, all right? That is my plan. That is my plan, and we could retrace back to 562 just because we're in our parallel channel. But if not, we continue to make higher lows and higher highs, and that is bullish structure for continuation to the upside. So we could see that break of 589, 590, or we can see a break below. But a pullback at 583 is not really too far-fetched. It's a lot of money being made, and people could take their profits. So be prepared and know your levels. Just know your levels. Above 589, 590, a break to the high side. If it holds its demand and not resistance, not a wall like this here, all right, or 577, which has to hold, right, because structure has bounced here and we're creating these higher lows. And so 577 needs to hold because that's where the breakout held at, okay? We pull back, all right? We broke out, pull back, break out, pull back, and we continue up. And so that's what I want to look for that. All right, now let's hop over to gold real quickly. If you guys do not remember, I mentioned in a video 2 days back, I think it was race theory. In race theory video, I mentioned that gold could fall below 306 and that we could fall back down towards 299. Well, we did that and some, and we fell back to 295. Boy, aren't you guys glad that you have a coach like me that give you accurate trades that you can actually go by and watch? This is a beautiful thing, and God is good, and I really give God the glory for being able to do this. It took me years to get here, so you guys don't give up. All right, don't give up, man. Keep going. Trading is a real thing, and if you have a system and a setup, and you're very passionate about it, and you really care about protecting your money and keeping money in your account, that's when you really hone in on understanding your mistakes, and you want to learn from them. All right, find you a good mentor. All right, and so gold has fallen back down. Honestly, if profit is being took on SPY, all right, I want to see a break above 300 would be interesting for gold, for us to fill some of these gaps for profit taking. The point of control is sitting here at 297, and we are so far the point of control where most of the volume is right here, this yellow and blue bar. Blue and gold bar. All right, you see all the other gold and blues, how they're a little bit smaller and more thinner. This is the biggest one, so this is where the most volume is at, and price has been bought up here several times, and right now the same thing is happening. I just look left, see what happened on May 2nd of this year. Now we're back here on May 13th, 2 weeks ago, and we're right back here for a reset for the folks who made money here to the upside and took their profits. Now price has reset right back to the same place it went from. This is a video game, and with patience you can play this game. With a system, you can play this game. With discipline, you can play this game. With patience, you can play this game. And that is the power of patience. All right, now let's move along to the put call ratio. All right, and we're going to wrap this video up soon. I appreciate you guys staying with me thus far. All right, if you've been enjoying the video since I've been talking about these markets, then hit that like button. All right, it helps with the YouTube algorithm, honestly, and it passes this video on to others who might find this interesting. Okay, if you find value, and if you haven't yet subscribed to the channel, subscribe. And if you want to check out some videos from the past that can catch you up to speed, I do have a couple of videos that I put out in the past months or two and last year that you can catch up with, but more specifically the trades that are happening right now. You can check out that link right above right here. Okay, and you can see some of the guidance I gave for the previous days. All right, now the put call ratio, real quickly to catch you up on speed. The put call ratio is a market eternal for me. It gives the number for how many people are buying calls and how many people are buying puts. Now there could be an inverse to that, right? Because what if they're showing a bunch of puts, right? Does that mean that the market is going to sell off? No, it could mean that people are hedging their calls because they're afraid, and it's our job to really analyze that with more market eternals. So this is not the solely indicator that I use for market eternals, but it's one of them, and I understand. And one way you can actually check the PCE with the SPY is you can just simply hover over these candlesticks, right? Hover over these candlesticks that represents price action, right? All right, and we're on a daily time frame for the PCE, which stands for put call ratio. Tells me how many puts or calls are being bought in the equity market, right? If you want to see how this works relative to SPY, go back to the date, hover over the candle, you see that was April 30th. Go back to April 30th and see what SPY did on April 30th. And you see this is going up a lot. See what SPY did on April 30th. That's your homework for today. See what SPY did on April 30th whenever this PCE ratio went up a lot. Now, there were a lot of put buying, and SPY did tank a lot. I will say that. I'll give you that much. We tanked a lot when this went up. All right, I'll leave you with that. That's your homework. And right now we are below the 21, which is my call input trigger. And we are below, all right? So put call ratio below 0.70 is bullish, which is why you see continuation for SPY. And right now we are still below that. If we get anything above here, all right, anything above, let's see how we want to play this. We on an hour time frame, so let's do it like this. Let's do it like this. Okay, anything above. Anything above here, all right? So right there, look to the side where my cursor is. See that 70? I just mentioned to you the number to gauge puts and calls for SPY is 70. So below 70 is where calls reside for SPY. Put call ratio is in a good zone for 7-0. And if you want more videos like this on this PCE specifically, let me know in the comments. I'll talk more about put call ratio. This is a market eternal, something that I look at to let me know where price is headed. Okay, it's a market eternal, a future forward thinking indicator. So it's a good thing to know, right? But I didn't want to, stretch it out with this video with this, because that's not what I made the video for. So appreciate you guys rocking with me thus far. And so as long as we stay below 0.70, I want to continue to try to buy the dip on SPY. If we start to hover above it and start to breach some of these levels up here, all right, and fill in these gaps, you can start seeing continuation to the downside on SPY for us to retest some of those levels I pointed out for some profit taking and for gaps to be filled to the downside, all right? Other than that, last thing I have for you is the Fear and Greed Index. And where are we at? We are at 69. We are in greed. Sometimes the price of the market still goes up on SPY when you're in greed, even in extreme greed. But I want to say this to you. I want you to know that there's a comment that's been made by a guy named Warren Buffett. Warren Buffett, all right? You might know him, you might not. But the statement goes, be fearful when everyone is greedy, and to be greedy when everyone is fearful. All right? And so when people are being greedy, you're supposed to be fearful to the downside, all right? And when people are fearful, you're supposed to be greedy. Now, a lot of folks bought stocks when it dropped a lot during the Trump and tariff chaos. All right. You can check my previous videos out for the proof of that. All right. We were here. Stocks got brought up, and now we're getting towards greed. And greed means people are overly optimistic about the price movement that is going up in SPY, and if they get extreme greed, they start buying, thinking that we're going to continue up, and we end up falling a whole bunch. And that's what this means. It's an indicator for market sentiment of human behavior. Human behavior, fear, greed, and FOMO, fear of missing out. I talk about this in my upcoming course that I think you guys are going to enjoy, and the name of that course is Precision Trading 3-Step System. All right, precision trading. It's going to be based around auction theory, a very simple in nature concept, and with the course material, it's going to bring it on home for you guys. All right, so that's the Fear and Greed Index. We are at greed. I want to be very cautious. I want to secure some profits on SPY. All right, as you can see, just wanted to hop back to the charts real quick. We've been rejecting ever since I spoke that. All right, 589 being a top right now. All right, we could fall back down here to retest and make a higher low. But that is all that I have for you guys. I appreciate you joining me in this Where To Next edition for the market. I'm your boy, Coach UV. And again, if you have enjoyed this video, if you found anything valuable about this video, hit that like button and that bell notification so that you can be informed on when I drop valuable videos in the future. And again, guys, I appreciate your time. Until the next time, peace.